Good afternoon, everybody. Joe from Cognitive Crypto here, giving you that weekly crypto intel drop. This week, we've got a couple things for you. First, we're going to start off like we do every week with the Bitcoin Fear and Greed Index. Then we're going to talk a little bit about some upcoming changes to the Celsius network and their application. We're going to talk a little bit about Meta and their ability to allow people to earn money through digital asset production. We're going to talk about a vulnerability in Discord that you should be aware of if you are using that. And then last, I'm going to just quickly touch on the potential purchase of Twitter by Elon Musk. Going forward into the first topic, I'm going to go ahead and share my screen for the presentation of the Fear and Greed Index. Looking on the screen right now, the Fear and Greed Index is displaying for the week. As you can see, over the last month, week, yesterday and now, we've really been in the fear and extreme fear location as the price today of Bitcoin dipped below 40,000. Really, the thing to look for is the support zone that is right around 37.5 thousand per Bitcoin. That's the zone that most people are talking about, where we would potentially see Bitcoin bounce and then go back up for the consolidation area. At this point, it's always hard to tell, but again, generally, it looks like the market is moving sideways. And if you zoom out the map on Bitcoin long term, it still is slowly trending upward, even though we've taken a recent dip. With my screen stop sharing, I'm going to go to the second topic for the week, which is the change to Celsius network and their ability to pay out yield to U.S. users. So if you didn't see your email and you are a Celsius user, they sent out an email this week saying that after 15 April, so tomorrow, anybody who lives in the U.S. will no longer be able to earn yield on new coins entering the Celsius network. This is critical to understand. They're going to add in two kinds of accounts now that you're going to see. One is going to be called an earn account, and the other one will be called a custody account. For anybody who's had crypto in Celsius network prior to 15 April, you'll be able to maintain that in your earn account, and that crypto will still be able to earn interest just like it has been over the past. So you'll essentially be grandfathered in to the old system. If you deposit any new crypto after 15 April, that crypto will then go into your custodial account. At that point, Celsius is just holding on to it, but they will not be paying yield. This is likely in response to some discussions between Celsius and regulators when it comes to securities and being able to pay out yield. That being said, if you are an accredited investor, which means you have a net worth over $1 million, or you make $200,000 or more single, or $300,000 or more joint, you will still be able to earn the yield that Celsius is offering. Overall, though, for Celsius, this is definitely a big hit to their narrative that they have going on, where they pay yield that's better than the banks. Like I said, the good news for everybody is that if you did get in before 15 April, and you still want to hold those coins, it definitely benefits you to just maintain that, as you'll still earn yield just like everybody else has been. Something to consider if you do hold the Celsius token, I think long term they're trying to improve the utility of that token. You may see an initial impact to that as users who would have put more capital in or were moving capital in and out may be hesitant to use Celsius now that they're not going to pay yield on new crypto coming in, as there are many other options for DeFi to earn cryptocurrency. So, that could potentially lead to an initial dip, but hopefully they'll continue to look to improve the utility of that token, and the flywheel will start to work, and then that can earn some additional income. But, I think it's definitely worth watching, because this is a major announcement for all US users. Going into the second topic for the week, I'm going to just quickly touch on an article that was released about Meta. And what Meta said is that they're going to be allowing digital content creators to earn money off of their creations. And where this is going to be done, it's going to be done through the game Horizon World, which is owned by Meta. And it's essentially a metaverse virtual reality game. It allows users to create their own world and then to have that virtual interaction. An interesting note, though, is that Meta is going to be charging a 30% hardware fee on all earnings made. And then also on top of that, Horizon World is going to have a 17.5% fee. So really the total fee on any creation that is sold in Meta is going to be 47.5%. So pretty high tax there. And that's all going to occur through the MetaQuest shop, again, where apps and games are sold. This time, looking at competitors, Apple for digital content creation only takes a 30% fee, which is still quite high. But again, this is looking on crypto. So really, what does that mean as a whole? If you're looking to be a digital content creator, first, I think where you need to look at it is Meta does have a strong ability or strong infrastructure in place already, being such a big company, that can allow fast development on horizons. And really, the user will still be able to make profit, even though you're really losing your time when you're developing these assets. But there's still going to be room for, if you are a creator, that you will earn money. But again, 50% of that is going to go to Meta. So the price points will be in accordance with that. If they need to pump the price up to earn more money, then that's probably what's going to happen. So it could create some inflation in the fees or in the prices of assets being sold. I think too, it's not really stated in there, but if you look at it over time, as more adoption occurs and as Meta grows and Horizon World grows, I think you will see those fees come down. But again, during the testing phase, Meta is going to have to build all the backend support to pay out users of digital content. So the fee is probably high in order to allow that to grow. As it grows, I think that will come down. And then, looking at it really from a big centralized company, again, if a centralized company is going to allow you to use their infrastructure, I think you can always expect to pay a fee. For example, it's a lot less, but OpenSea still takes 2.5%. And again, they're not even operating as a gaming platform. They're really just an NFT marketplace at this point. So Meta's taking it a step further by offering the game where those items can be used and develops. So I think what you're going to see is, again, those fees will probably come down, but because they're supporting with infrastructure, they have to maintain some fees, again, to maintain maintenance on that infrastructure. I think you could argue all day the expectations on fees from companies looking at, well, they should charge less. No, it's okay. I think it could go both ways. But really, I think the best thing to look at here is it does bring exposure for digital artists in a pretty massive community or massive company. So, I think there's benefit to that, where the more exposure crypto gets through digital assets, the easier the user interfaces will become, because bigger companies will get behind that. And then that'll bring more people into crypto as a whole. The downside to that, right, is that a centralized company with a lot of control is kind of sometimes against what the crypto community is for. And I think, you see decentralized finance already countering this, and we'll probably look to counter this in many ways with development of games, which we're seeing all over the space right now, where you can create the assets for games and then sell them with a lower percent being taken out by the decentralized platform. So, a lot to look at on that, but it is interesting to see that Meta is going to allow content creators to at least gain from some of their creations. Going into topic number 3 for the week, it's another hack alert, and this is going to be coming on your Discord. And this hack that I'm going to talk about today is something I saw, it looks like on the forums. It's been around maybe since late December, but it's definitely worth noting. What this hack is, it's a session token theft. So how does all of this work? So first, every time you log into Discord, a token is created. And that token allows you to log back in without having to re-put your password and username in each time. And the only way that that token is going to be invalidated is if you do log out completely from Discord. That token gets saved on your computer so you can have seamless entry in and out of Discord without logging in. The issue is that that token isn't going to be bound, one, to your system, so it's not bound to your IP or any information on your system, and it's not bound geographically. So if you're in the United States, it's not bound to the US, so anybody in the world could theoretically get that and use it. And the problem is, if someone gets a hold of your token, they're able to access your entire Discord account without using two-factor authentication. So it completely negates the ability for that to work and essentially makes it useless, because they can go in and tinker anyways. So how does someone take your token, and what does that look like? Really, how that's going to work is it's going to be some malicious actor who gets you to go to a modified website, click on a malicious file or some sort of executable file that loads malware on your computer to take that information. And once they have it, that's where the problem begins. And you may have to be careful, right? You have to look for diligent phishing attempts that can come at you, very tightly socially engineered attempts to try to get you to open files. And that's something that you really should be aware of. So once they have that token, anywhere in the world, doesn't matter where they are, what system they're on, they're able to take full control of your Discord. And that means they can modify any Discords your administrator is on, deleting the server, or they can just create havoc for your account, potentially getting it blocked if they use it for spamming or other malicious activity. So how can you protect yourself? Really, the best defense against this is just not trusting anybody. You shouldn't trust files. You shouldn't trust people you just met on Discord. You really want to verify who you're talking to on Discord or any other account where, Telegram or anywhere else where you might meet people who know that you have a Discord account and can come after that. Because once they have it, again, they can wipe everything you have. Again, of note, it's always worth setting your two-factor authentication on your Discord account. However, in this instance, it won't work because once you get into someone's Discord account, there's no requirement for two-factor authentication, make purchases, to change your password, or to delete information that you have worked so long to build. So again, what's my best advice on all that? Just be careful when you're trusting anybody inside Discord, anybody you met inside of projects. Definitely be careful of any suspicious links. And if you get a friend request from someone and it looks like a file that isn't loading, do not download that file because it's likely they will try to do a token attack. And last this week, I wanted to hit on it just because it was big news going into today, the potential purchase of Twitter by Elon Musk. So originally, you'll probably have seen last week, he had bought in a stake of about 9.2% of the Twitter stock holdings. And again, that was not a majority stake. So I saw a lot of news about him being able to make decisions. Again, you would still need over 50% of the stocks in order to make unilateral decisions. So he was just the largest stockholder up until this week when Vanguard purchased a little bit more. And he had planned to join the board of directors for Twitter, but ultimately shied against it. And here's what he said. He said, live today, he said, Twitter serves as the de facto public town square. Failing to adhere to free speech principles fundamentally undermines democracy. So it's really unknown exactly what happened behind closed doors, but it's probably kind of clear that he wasn't super excited about what he heard as he thought about joining the board of directors. So what he did then is he offered a $41.3 billion offer to Twitter to buy it, which is 38% over this morning's price of the stock. And it came in at $54.20 per share. And he did notify the SEC about that. So it shows that he was serious about it. At the same time, another interesting one on Twitter was the founder of Tron blockchain, Justin Sun, said he would offer $60 per share, and then he would take into account everything that Elon was trying to do with the platform if he could do that. But again, that was just a Twitter post and didn't have any backing of an actual filing with the SEC. So really, why does this all matter? I think when you look at Twitter, right, you don't hear about crypto Instagram, you don't hear about crypto Facebook, you hear about crypto Twitter, and it's a huge source of information. Personally, for us, we use it for a couple of things. We use it to get sentiment analysis for where the market is trending, how people are feeling, kind of understanding, the greater amount of information than we would be able to research on our own. And really that helps us identify information asymmetries across all of the crypto space, which I think is critical. And again, it's really massing the information of lots of smart people in one location. And in crypto, it's really important because that's a huge spot where everybody's posting their opinions and their facts about different projects, and often it's a place you can find it. So, I really don't think there's going to be much of an impact to crypto Twitter, at least in the short term, because of this. So I think it'll still be a great source of information, but definitely something to watch because, again, it's such a hot topic within the community here, and today was pretty big news. That concludes this week's weekly crypto intel drop. We definitely appreciate you guys stopping by to watch it for Cognitive Crypto. And if you liked what you heard or got some good information, definitely feel free to hit that like or subscribe button for us, and then check us out on our other platforms in the description. We'll catch you guys next week for the next update. See ya.